Let's start with algorithmic trading. Now, if you're still thinking that some guy in a suit is making stock picks by flipping through the Wall Street Journal, you're in the fucking Stone Age. The real players, the apex predators, are AI-driven algorithms. These aren't just fast, they're relentless, running on machine learning models that gobble up every bit of data they can, market trends, breaking news, even sentiment from social media. This isn't some quaint automation, this is full-blown cutthroat exploitation of every inefficiency out there. Here's the brutal reality: up to 75% of all US stock trades are driven by these algorithms. That's right, 75%. The whole market is becoming this gigantic self-aware machine, and if you're not in it, you're on the sidelines. And guess what? The market for algorithmic trading is projected to hit $20 billion by 2028. This isn't just growth, it's a blitzkrieg. Banks, hedge funds, even the smaller players are funneling billions into this tech, and for good reason. Goldman Sachs, for example, dumps over $1 billion every year into their technology infrastructure. They know what's up, they've seen the future, and they're building it. Firms using AI-driven trading are slicing their transaction cost by 90%. Imagine that for a second, 90%. These firms aren't just printing money, they're fucking minting it. And all while your grandpa's stockbroker is still fiddling with his BlackBerry. If your trading strategy doesn't involve AI, let's be clear, it's obsolete. You're bringing a knife to a goddamn gunfight. The firms that are crushing it in today's market are the ones who've realized that AI isn't an add-on, it's the whole fucking game. Every second, every millisecond, these algorithms are outpacing human traders, analyzing massive data sets and making moves faster than you can blink. There's no hesitation, no emotion, no gut feelings. It's just cold, calculated, profitable execution. And it's not just about speed, it's about sheer accuracy. AI models can predict and adapt to market shifts in ways no human can. They're running scenarios, backtesting strategies, and updating models on the fly, all with minimal human oversight. This is where the real money is being made, and if you're still stuck in the old ways of thinking, you're about to get wiped out by a wave of machine-driven precision that doesn't give a damn about your nostalgia for the good old days of trading. Now let's talk about robo-advisors, those digital juggernauts that are rewriting the rules of personal finance. You might have heard people say they're a cheaper alternative to traditional advisors. Yeah, well, that's putting it mildly. Robo-advisors are data-guzzling monsters that are delivering personalized investment advice faster and more accurately than your old-school financial advisor ever could. You want a custom portfolio? No problem. These systems will analyze every microfast of your risk tolerance, goals, and market opportunities, then spit out a portfolio tailored to you, updated faster than you can take a piss. And get this, the robo-advisor market is on a fucking rampage. It was valued at $4.5 billion in 2020, but by 2027, it's expected to explode past $41 billion. This isn't a trend, it's a full-scale revolution. By 2025, these platforms will be managing $1 trillion in assets in the US alone, and the client acquisition rates are soaring, with a 200% increase over the last 2 years. Why? Because millennials and Gen Z aren't putting up with high fees and shitty service. They want fast, they want cheap, and they want results. Traditional financial advisors can't compete with an AI that doesn't need sleep, doesn't charge commission, and doesn't make emotional decisions. Look, robo-advisors aren't just about giving you some advice, they're about giving you better advice, faster and cheaper than any human could. Firms using robo-advisors are cutting operational costs by up to 60%. 60%. That's because these systems are almost fully automated, meaning they cost peanuts to run compared to the bloated overhead of traditional advisors. And you want to talk about retention? Robo-advisors have asset retention rates as high as 95% because people love the simplicity, the low fees, and the constant updates. Once you start using one, why the hell would you go back to paying someone in a suit to do what an algorithm can do faster, better, and without the bullshit? Firms that aren't adopting robo-advisors are playing a dangerous game. They're betting that people will keep paying through the nose for the human touch. Here's a newsflash. People don't give a shit about the human touch. When they can get better returns and lower fees with a machine, this isn't hyperbole, it's the future. And if you're not part of it, you're headed for the graveyard of irrelevant financial services. Before we jump into how AI is revolutionizing fraud detection, I want to make sure you don't miss a thing. If you're getting value out of this and want to stay ahead of the game when it comes to AI in finance, smash that like button, drop a comment, and hit the subscribe button. Turn on notifications so you're the first to know when I drop new videos. I'm breaking down how AI is turning the financial world upside down, and trust me, you don't want to be left behind. Moving on to fraud detection, this is where AI really proves it's not just a fancy tool, it's the goddamn sniper on the roof. Old school fraud detection was reactive. Something bad happened, and then some guy in an office somewhere had to figure it out after the fact. That's playing defense, but AI plays offense. It's proactive, nuking fraud before it even has the chance to surface. It's running real-time analysis on every transaction, detecting anomalies and predicting threats before they become a problem. This is an algorithmic intelligence operation on steroids. Let me break it down for you. Fraud is costing the financial sector a mind-blowing $32 billion a year. That's B for billion, and that's with some fraud detection in place. AI-driven fraud detection can cut those losses by half. That's $16 billion in savings just by implementing an AI strategy that's already proven to be light years ahead of traditional methods. Companies that are using AI for fraud detection are seeing manual review times drop by 90%. 90%, you know what that means? It means those companies aren't wasting time chasing their tails. They're locking down fraud faster, with detection rates soaring up to 85%. That's the kind of fortress you want around your money. AI isn't just stopping the obvious scams. It's learning from every fraud attempt, every suspicious transaction, getting smarter with each one. Firms that don't have AI handling their fraud detection are basically leaving the front door wide open. You're not just letting fraudsters in, you're handing them the keys. You might as well burn cash in your office, because without AI, that's exactly what you're doing. AI systems can shift you from reactive defense to a proactive offense, predicting and neutralizing threats before they even materialize. And it's not just about the money you save, it's about the trust you build with your customers. When your clients know that you're ahead of the game in protecting their assets, they stick around, they stay loyal, and loyalty is priceless in an industry that's hemorrhaging billions in fraud losses every year. Let's take a hard look at personal finance apps where AI isn't just an enhancement, it's the whole fucking engine. AI is seamlessly integrating into every part of these apps, essentially transforming them into cash flow whisperers. It's not just tracking your expenses anymore, it's doing everything. We're talking personalized financial advice, real-time spending analysis, and predictive budgeting. AI isn't just watching how you spend, it's predicting how you're going to blow your money on dumb shit next month and nudging you to make smarter decisions before it even happens. It's the ruthless, no bullshit financial advisor in your pocket 24/7, never sleeps, never misses a beat. Apps like Mint, WineAB, and the next-gen competitors are running AI-driven algorithms that don't just track your money, they understand it. And here's why it's fucking genius. These AI systems are predicting your spending patterns based on historical data and even external factors like market conditions or upcoming bills. You think you're going to spend your paycheck smartly? AI already knows you're about to overspend on some useless crap and adjust your savings goals in real time to compensate. It's like getting slapped upside the head by your financially responsible alter ego. And the impact? Well, personal finance apps are pulling in over 100 million users globally, with a 70% increase in user engagement driven purely by AI. Why? Because users are sticking with apps that get them. AI-powered apps can offer recommendations tailored to your financial habits, and people love that shit. In fact, apps using AI are retaining up to 90% of their users because they're more than just apps. They're personal financial ecosystems. The market for these AI-powered apps is expected to hit $2 billion by 2027, and that's largely thanks to AI being baked into the user experience. This isn't some optional feature anymore, it's the baseline expectation. The best apps are integrating everything spending, saving, investing into one smooth, addictive interface. You can set up savings goals, check your investments, get personalized spending alerts, and optimize your budget, all without ever leaving the app. It's a full-scale financial overhaul at your fingertips. And here's the kicker. Apps that don't integrate AI are on the fast track to irrelevance. Users are twice as likely to stick with apps that provide AI-driven insights versus the old school static budgeting apps. If your app isn't leveraging AI to deliver smarter, faster, and more tailored insights, you're serving stale bread in a world where fresh-baked insights are the norm. You're dead in the water, sinking fast, while the AI-driven apps are sailing ahead, grabbing all the users who actually give a shit about where their money's going. Now let's broaden the scope and look at the business intelligence behind AI adoption in finance. You can't afford to be half-assed about this. We're talking 90% of financial services firms already going all in with AI in some form, and the rest are scrambling like their hair's on fire, trying not to be left in the dust. If you're still thinking AI is just a nice to have, you're so far behind the curve you can't even see it anymore. This isn't a trend. This is the new oxygen. You're either breathing it or you're choking. It's that simple. Let's talk revenue. Companies deploying AI are seeing their revenue skyrocket by 30%, and that's not some pie-in-the-sky projection for a decade from now. That's now. These aren't incremental gains. This is full-scale acceleration that's tearing apart old business models, leaving traditional firms gasping for relevance. If you're not embedding AI into every crevice of your operations, you're not just leaving money on the table, you're actively losing ground. Every single day you're not using AI, your competitors are eating your lunch, and you'll be too busy trying to catch up to even notice until it's too late. And then there's the operational efficiency. AI isn't just improving things by a few percent here and there, it's smashing inefficiencies with a goddamn sledgehammer. AI can cut operational drag by up to 40%. Picture this: your overhead costs plummet while your output surges. AI automates manual tasks, processes data at hyperspeed, and allocates resources with ruthless precision. It's not about making a few tasks easier, it's about transforming the entire fucking structure of how your company works. That's not theory, that's fact. It's showing up in quarterly reports right now for firms that have gone all in with AI. The ROI isn't just hypothetical, it's cashing out in real time. Remember fraud detection? Let's circle back to that, because it's not just about saving some cash, it's about completely rewriting how companies approach risk management. In traditional fraud detection, you wait for fraud to happen, you spot it, and then you try to fix it. That's reactive bullshit. But AI-driven fraud detection, that's an offensive strategy. It's proactive, predictive, and it's decimating fraud before it even has a chance to make a dent. Financial institutions lose $32 billion to fraud annually. With AI on your side, that number could be slashed by half. That's $16 billion saved just by getting your shit together and implementing a real AI fraud strategy. And firms already doing this, they're seeing 90% drops in manual review times. AI catches the fraud, flags it, and neutralizes it before a human even knows what's up. Detection rates shoot up to 85%, and it's not stopping there. AI learns from every single fraud attempt, so it just keeps getting better. Think of it as the financial fortress that keeps reinforcing itself, building stronger walls after every attempted breach. Companies not using AI in fraud detection are basically just leaving a sign on the door that says, "Come on in, steal our shit." You're inviting disaster. Because guess what? Your competitors are locking everything down. Their AI systems aren't just catching fraud, they're anticipating it, evolving faster than the fraudsters can keep up. And in a world where consumer trust is worth its weight in gold, having an unbreachable fortress around your financial operations isn't just an advantage, it's non-negotiable. You either have it or you're toast.